Good morning. Today we're talking about understanding the market. It's been a question that continues to come up. Why does price move in the way that it moves? Well, why do stocks go up? So I thought that I would answer this question because this is a question that I had when I was first starting out too. Well, why do price move in? Well, why do stocks go up? Right? Like what's driving the market? Well, basically the question that we're all trying to answer is how are we going to make money from this, right? That's our true bottom line. I'll give you what I thought drove the market higher and what I learned a little bit through the years, and then I'll give you well what actually works. So that because what I believed at the start is probably similar to what you believe now. And if you're watching this, type into the chat and let me know if you've had these kinds of ideas. So when I first started out, I started out trading about 25 years ago. The way that I thought that the market worked was simply you put money in, you wait enough time, and over enough time, more money somehow pops out the other end. Right? Time in is what lets the money grow. If have you believed that? Is that your perspective on the market? Type it into the chat. Let me know. When I started in the market, I started in 1999. For those of you that don't know, 1999 is what's commonly referred to as the tech bubble or leading into the top of the tech bubble. The NASDAQ was up substantially for that period. Yeah, I just see Yash just put in some charts and some rockets and all those kinds of things. Yeah, that basically sums up 1999. Everything was going up. I had no idea. I just thought you put money in, you wait X amount of time, more money pops out. So I started in 1999 with that idea. I went to my bank, didn't even know where to buy stocks. I went there and I said, I'd like to buy some stocks. They said, no, you want this. They handed me some mutual funds. Put my money into the mutual funds, expecting, well, the pros know better than I do. I will give them my money and I will wait and more money will pop out the other side. And when I graduated with my bachelor's degree in 2002, I learned the hard way that time in does not always equal more money in your pocket. Because if you were looking at 2002, and you know what? I'm actually going to show you a chart of the NASDAQ from back then. So why don't I fire up TradingView? That TradingView is my charting service of choice. Fire up TradingView. Here is TradingView. Here is a monthly charts of the NASDAQ. And I'm going to bring you guys over here on Instagram over as well. Great. So this is where the NASDAQ's at right now. Close my calendar out there so that way you guys aren't busy looking at that. This is where the NASDAQ's at right now. Here's where it was at in 1999. I actually talk about this a bit in my book as well. So I'm buying in, let's see, 98, 99, somewhere in this vicinity. And so I'm in the NASDAQ for what turned out to be more than 100% move. When I exited 2002, right? Time in the market. I'm exiting down here. So I exit when the NASDAQ was down maybe about 40% from where I bought it. Somehow the mutual funds, they did manage to have a little bit less of a loss. I was down only 20%, but I learned a few things the hard way. I learned that time in the market, right? In the market for 3 years, time in the market does not equal more money in your pocket. So, what does move the market? Time in the market doesn't move things. Well, what does move things? I'll tell you what else doesn't move things. I learned about the story, right? So, what's a story of the day? I learned about PE ratios. I learned that if the company has a good story, that you should stick with that company. And unless if the story somehow changes, that it might be a buying opportunity. So let's say that you're in a stock, right? Let's take a look at, I don't know, let's take a look at SMCI, right? This is one that I've been trading. I was in this one for quite a while, actually sold it recently. This is SMCI. They make chips that help with AI, which has been a very hot topic of late. Uh, had this one a few times. One of the first times that we highlighted it for the Mara Elite Premium and VIP members was way down here. Since then, price has run more than 130%. Most recent buy for me, add on, is down here, ran another 40%. Recently sold I scaled out positions out. I don't My current method of exiting trades is to scale out of positions into strength. So I sold the last bit of it up here, and now I'm waiting for this thing to consolidate. The reason why I'm sharing this particular idea with you is because we spoke about the story. Spoke about the story of a stock. And if the story of a stock is still the same, then my original idea was, well, you should hold on to this thing. Well, if, if AI hasn't gone anywhere, right? So if AI hasn't gone anywhere, we should just hold this thing forever, right? Same thing with, say, I don't know, Amazon, right? For this whole ride. Maybe we should be holding Amazon. Has the story really changed all that much? I don't know, right? How do you know when the story changes? That's the big question. That was the question that I ended up having when I was in a stock that made airline parts. It made the little latches for airlines. That was one of the stocks that I learned this very valuable lesson on. So now we're going back again. This is probably 2005, perhaps, somewhere in that neighborhood. Bought some stock in a company that made airline latches. Hot industry at the time. Bought into this company, and price was moving up. Price was moving up. And then all of a sudden, price started to come back in. And my notion then was that, well, if the story hasn't changed, then perhaps I should buy some more of the stock. Maybe the market is throwing a sale, right? So this was starting to get me into the mindset of look at the news, and the news is going to be the thing that should tell me if the price is moving one way or another, or what the story is, and trying to figure out what I think about the uh, the movement and the reasons why of all these other things. So I bought into the company. Price went up. Price came back down. No story to be seen. So perhaps this was one of those times to buy some more. So I bought some more. Price continued to fall. Maybe the market is giving me a really great sale. Bought some more. Then, about when I was down about 50%, I found out that the story had changed long before I had known about it. So, how do you find out when the story changes? If we're trying to find out things like the news and all these other kinds of things, or other bits and pieces of knowledge that maybe somebody else has, how do we know? The answer I found out is that we don't know. Or what we can do that's a lot more productive, a lot easier, And actual truth is to observe price action. And this is a big part of what I do now. I don't only look at price action, but it is a big part of it. So, what actually moves stocks? Let's talk about that. There's a few things that will move stocks. So, there was shreds of truth at each stage of my trading journey. And I'm giving it to you here and now. So, hopefully, that way you don't have to suffer the same kinds of uh, long and drawn out journey. Well, we're all going to take our lumps along the way, but hopefully, your uh, time of taking lumps is shorter than mine. So, part of what drives stocks higher historically has been great earnings, great sales, continuously improving earnings and sales. If a company has earnings and sales that continue to get larger and larger and larger, then that's one of the things that will drive interest in that company. But it's not only that it has current earnings and current sales that are great. And by great, I mean on average 25% or more quarter over quarter. You're also comparing that stock to others in the same industry group, right? So let's say company A has 25% earnings quarter over quarter and 25% sales quarter over quarter. That sounds good. But if you're comparing that to others in the same industry group and everybody else is doing 100% quarter over quarter, then all of a sudden the 25% one kind of sucks, right? So it's relative. A stock's performance relative to its group. Interesting. So we want the stock to have uh, great earnings, great sales relative to others in its own industry. Think of 25% as perhaps a baseline, but relative to its industry. We also want it to have great earnings and sales looking forward. So if the market thinks that this company is going to continue to produce great earnings and sales and it's going to be a hot thing, then there'll be a lot more interest in it. Just like how there's so much interest in any stock that is or has been involved with AI and how that has been a hot industry group, a hot sector for past couple of months. That is the reason why the market is looking forward for those kinds of things. The only thing that you really need is to understand the broader concept of that story that like, oh, AI stocks are hot now. And then you could go and see and look at charts like how we were looking at SMCI and then see, well, what's actually happening, right? So we can have these ideas of AI being a hot topic, right? So let's go back over to the chart. So AI is hot, right? And I might think that AI is hot back here or over here. Well, why don't we bring up the ticker symbol AI, right? Here's the ticker symbol AI, right? It wasn't doing that great for a while, and then all of a sudden down here in what was that, December. Then it started to have a bit of a run, consolidation, and then it started to run again, and now it's consolidating again. So if you're looking at a stock like this and you start to think about the notion of AI, and let's say that you're really into AI, you think that it's the next big wave, but you're looking at it back here, right back here for you guys over here on Instagram, and you see that prices falling, prices falling, prices falling, that doesn't mean that you should be diving in. This is where you start to blend the story and the fundamental analysis, and you start to blend it with the technical analysis, so that way you could understand the general broader stories and the things that move stocks and marry it with what's actually happening right here on the chart. So if you're in a section like over here, right, and price is declining, then that's telling you that for whatever reason the market at that point in time is selling off a particular stock, the index, whatever it happens to be that you're looking at. We don't want to fight the market. We want to be trading with the market. We might have our opinion of what is going to happen and why, but the only thing that actually matters is what is happening, and we could observe in real time what's happening. We're not trying to predict anything at this point. We might have ideas of earnings and sales. And remember when we were talking about that part, when we were talking about earnings and sales and projections and those kinds of things into the future, that this market might be big. That's about the extent of it. But when we start to think in that way, then we could start to drill down onto the chart and see, do other people think the same way? Well, perhaps they didn't back here, but enough people started to think about it when it started to turn, and more people started to think about it when it started to pull back and then turn over here, right? So, one of the ways now that we could start to take advantage of some of these moves, and I'll leave it off there and then start to answer some questions. One of the ways that we could start to take advantage of some of these moves is when we start to see price running up and then pulling back. Look for tight areas of consolidation. Uh, AI might not be like this particular ticker might not be the best example. I actually think SNCI is a much better example, and really one of the reasons why I traded this one. So you could see how this one was in an uptrend, right? People were buying it. People actually thought that this is a game changer, that it does have the earnings and the sales and the story, all these things. Then price starts to pull back and consolidate. So when price pulls back and consolidates, then that's when you could start to do all the technical analysis of, okay, this thing is still in an uptrend. It's pulling back. It's getting the price is being supported at key levels. What's going to be a low risk entry point with high potential reward? Question you might have is, well, what defines low risk? Low risk is going to be the difference between where you enter and where you would cut the loss if you're wrong. So in this case, I was looking to enter right here above that high, couple of days, and then exit if price fell back below the 21 period moving average. So that gave me a risk of about 6.5%. The upside, right? I didn't know how far it was going to run at that point, but the upside ended being 40%. So 6 to 1. That is what we want to try to get. We want to try to get asymmetric reward to risk. And part of what creates that asymmetric reward to risk is having a tight distance between the entry and the stop and trading stocks that are already in a trend. Stocks will not go up forever, but when you're looking at a stock and it's in an uptrend and it starts to pull back, then that's where we could get in uh, with a low risk entry point, because at this stage, right, at a key moving average, the 21 period moving average is one of those key moving averages. If it's going to test that level, it's either going to continue to consolidate and march on down to the 50 period moving average, or it'll bounce and continue its ascent. So in this case, you have a low risk entry point with high potential reward. Let me know what questions you guys have. Akshath wrote in saying that he actually remembers some of these stories from the Trading Mind Wheel book. Yes, I do go much more in depth in this book. This book is 240 pages, far more than what I could say here on a live stream. So if you haven't gotten a copy of this book yet, highly, highly recommend that you do. Let's see, what other questions do you guys have? Blunt Tubes is saying nice cup and handle. I think that might have been for SMCI. So here's a thing with cup and handles, and here's the thing with setups in general. Setups might have the overall essence of a certain pattern. Like you might be able to look at a chart and see that, oh yeah, you could draw out a cup with handle on this thing. Right. So let's go and take a look at the chart once again. You might be able to draw out a cup with handle. Yeah, I don't want to mess up my other annotations over here. Let's see what else can we get on this. Um, yeah, you might be able to draw out a cup with handle there, but just being able to draw out a cup with handle doesn't mean that it actually is a legitimate cup with handle. What does that mean? What that means is that you want to come up with a clear definition of what you're going to define as a cup with handle, as a double bottom. For whatever kind of setup you are going to have, you want to have a definition for what it's going to be. Because if you don't have a clear definition of your setup, then all of a sudden all sorts of things can start to work its way into this is close enough, this is kind of sort of there, and then what happens, you end up trading, you end up over trading, and you end up taking low quality trades. That's why we need to have a clear definition of what constitutes our setup. For me, for this one, I was not trading this as a cup with handle, but it was what I define as a pullback setup. So, how do you define your different setups here? Let's take a look at a spreadsheet that I share. This spreadsheet is one that I share with our members. It's a pretty big spreadsheet. I'm just going to drag this thing over here. Lots of things on the spreadsheet. One of them is this tab down here called setups. And if Google can load, perhaps we'll see some of those setups. Anyhow, if Google loads, then I'll share it with you guys. If not, then uh, we'll have to see it next time. But there it goes. All right, good. So it's important to have your setups clearly defined, whatever they're going to be. This is how I define them. It's now what's more important is that you come up with clear definitions like this for whatever it is that you're going to trade. Be as specific as you can. Write out uh, the time frame that you're going to be looking for this thing for, the length, the depth of the pattern, the overall look and character, where in the trend you're going to find it, the market type that you're going to find it, what takes these from good to great. Come up with examples for each type of setup. So that way, when you're trading these in real time, that you'll have a model that you could go and match it against. That, in a nutshell, is how you're going to have very well defined, clear setups, and uh, it'll help you to it'll help you not overtrade. It'll help you make sure that you take only the highest quality trades, and it's going to make your trading life a lot easier. For those of you that anybody here paint, you ever paint something I'm not even painting like being an artist, but just like painting a wall. You ever paint a wall? For those of you that have, you probably know that most of the time is spent in the preparation. Well, like putting tape down, putting a tarp down so that way you don't get paint all over the floor, then taping the walls, then you're putting the paint in the can, the roller, then you roll it, then you slap it on the wall, and that's it. The actual painting part is the easy thing. It takes no time at all. Similar with trading, most of the time is spent in the preparation, coming up with your setups, clearly defining your setups, finding models of those setups, finding models of great ones. That way, when it's time to actually go and trade, easy peasy, lemon squeezy. Let's see, what other questions are there? Question from XF here. Let's see. Do you initiate any positions on Monday, Tuesday, Wednesday, given there is an FOMC event on Wednesday? I will execute trades on any given day, any given time. And it's if the stock is setting up properly, so I'm looking for high quality trades that fit my definitions. If I find stocks that fit my definitions and I uh, figure out that this is a high quality setup, then I'm going to take it regardless of if it's FOMC or anything else. The reason why is because the stock is telling us something. Right? Well, when we're looking at a price chart, let's take a look at the price chart again over here just to bring up an example while I'm talking through this. What this is showing us here, like that, we're taking a look into the mind of uh, thousands and millions of individuals as they're making real time decisions. So, this isn't looking at price is not a way that we're looking to predict the future, but we're taking a look at what people are thinking right now in the moment. That's why what this bar is right here and what they thought leading up to that point. How many people are bidding it up at that price? Here's the volume down here. So that's giving you all sorts of insights into the trade. So if something is getting bid up ahead of an event, then great. If it's not, that's great too. And I think we're going to have to wrap it up here because I have a meeting that I'm going to have to jump off and run to. So thank you all so much for joining me today. I appreciate it. Always great seeing you. And I will see you back here tomorrow for the next morning coffee with Mike. Have a wonderful and blessed day. Take care. Much love. Peace out, everybody.